We got the rate cut from the Fed. We were looking for it, and rates went up. What the heck, Kevin? Tell us what's really going on.
It's amazing. If you were to watch TV, you would think that rates are plummeting. And I get those calls constantly. I saw the Fed cut rates today. Hey, can I take advantage of these lower interest rates? And I then have to go and say, sorry, it was the opposite effect. What people don't understand is what the Fed does is they affect the Fed funds rate. That is for short-term lending. We talked about it before, credit cards, cars. They do not affect long-term interest rates. Long-term interest rates are dictated by the 10-year Treasury. If I pull up the 10-year Treasury really quick, you can see it. It's been on the rise since the Fed meeting. The reason why is because the Fed now is saying inflation is the biggest concern. And now they got a report that says the job market might not be laboring so much, that there is no significant reason for the Fed to be cutting interest rates further. So the market, as we talk about all the time, is forward thinking. They had already baked in that cut. What you're seeing now is a readjustment. And instead of playing in the range around 4%, we're going to now play around 4.1%. And we're going to bounce in between that based on data or anything that we can gather geopolitically that has the potential to move interest rates. What's happening is, although we got that Fed cut, it doesn't correlate to long-term interest rates. And the market is readjusting from a 10-year Treasury standpoint. And we're playing in a little bit more elevated interest rates until we get more data.
Our cake is baking, and we are in the Great American Bake Off.
That's right. We're getting cooked.